Hello, hello, and welcome to March 26th. Alpha has ITB at 73%. There it is, 73%. It's pulled ahead and is now in solid first place and no longer battling with KR, which KR actually moved up into 47. But let's focus on ITB here. ITB is closed across the second ratio, closing in on the second ratio, and then there's a third. It's approximately 3 days out. Now, how do I know that? Well, let's call in the calendar and the calculator, and we'll do that. So we're closing. The target is 74.1 is our third ratio. Our close was our high. Our close was 68.53. So minus 68.53, 557, and our ATR is $2. Divide that by 2, round it off, and we are 2.78 days away. So 3 ideal trading days. We'll cross that third ratio and then go into and then start looking for the lower low exit. Now we have at this current time, it would be this lower low. That's another thing too. You have a lower low here, but that's not the fresh or the current. The current lower low was here. So the stop would move to this lower low, not this one. Always go to the fresh, because that's where the buyers and the sellers have parted ways. Here is the down action is the sellers, and it's here, and then this is the buyers coming into the market, taking it back up. And the buyers and sellers are the same identical people. They'll sell it here, wait till it drops here, then come back in with the fresh profit and buy here and go back up again. Okay, so that is the action for that. While we're yeah, that's the action for that. Let's go on and now to KR. And here at KR is our market. Now, so KR, going on the same analogy, look, KR had a close of 37.23 right there on the close line, 37.23. We are 37.70. That would be a rounded off to 50 cents. We are one day away to get that close above that third ratio, and then go to lower low for the exit. Now remember, this is only exit rule number 2. Exit rule number 3 is the ROI 100. So let's review. Exit number 1 is your end of the bottom of the first ratio. Right there, the one exit, you're the one that you're willing to give up. Then as the closes above the ratios, you're waiting for the close above the third ratio, and then you'll be looking for the higher low, lower low, higher low, which will then put the stop right there. And that would be exit number 2. Exit number 3 would be to close above exit number 2. And that only occurs when it closes above the third ratio. Exit number 3 is your ROI 100. And whoever gets there first, so between rule number 2 and 3, do not go in sequential order. I had a position one time that ROI 100 was here below the third ratio. We went to last bar low right immediately. You do not have to go through the close above the third ratio if you hit ROI 100 first. That is what whoever crosses the condition. And once that condition is set, it doesn't take. Remember rule number 3. Rule number 4 of the rules of engagement: exit, do not retreat. So review quickly the rules. Rule number 1: protect capital. This is why we're only going to risk 1 unit for that loss. Number 2: protect capital. Protect profit. As soon as it closes that third ratio, we're going to lock in that profit. Now, yeah, you could use close ratio exit, which is right there. The close was above the first ratio, and then you would go right along here, and then you would have been stopped out here. The advantage of that is you get your trading money back. How much you lose, it all depends on the market makers. It could be a profit or no profit. Then rule number, and then the other is that you can wait for the close above the second ratio. So there are those are exit ratio rules that depend upon your trading experience and deciding which one is going to work best. Right now for this challenge, which is going to April 1st, is we are with the 3-to-1. and it's the 3-to-1 for the foreseeable future. We are looking at what we call an Elvis shift for April 1st, and I'll get into that a little bit very shortly. So let's go on now now that we have KR, where's CVS at 68%? CVS is right there. And there is CVS, and CBS, same situation. Now CBS's third ratio is $80 right there, $80. The ATR is $1.68. So again, the same. How many more days? How many more ideal trading days? Well, that's close at 70. Call it $76. $4. So $4 divided by $1.68 makes it a little over 2 trading days away. So that's how we'll be looking at that into anticipation of getting up there and getting up of that ratio. Okay, so that takes care of CVS. In the closing minutes, I do want to address the 2 Elvis shifts that are in process. Today's Friday. There's only 4 more trading days before we are allowed an Elvis shift, and I would like to do an Elvis shift come next Thursday, April 1st. The first Elvis shift that's under consideration is closing above the close ratio exit. Price closes above the ratio, and we immediately go to that exit, and then we would get stopped. If that we have done that, we would have stopped out here. That would have been 1, 2, 3, 6. That's 7. That's 7 trading days plus weekends. Remember, options lose value over the weekend because of time decay. So essentially, this would have been about nine days of time that we would not have been spending in this option, taking profit here at 74. Drawback: it could be a very small percentage win. But the pro to it, if you get compound wins on the first ratio, then you're winning on compound winnings to double the account. Has these theories been proved out in any kind of main media? No. This is why I'm doing these challenges. I've always asked a question in these classes. Has anybody ever done a definitive study on these strategies and this performance? And like the Boing Boing, which is what Steve Saminsky's mentioned, and from 2 trade schools that I've been to, it has a 70% win ratio. What's the return on capital? Nobody knows. So this is why we're doing this one. This is stochastics. This is daily stochastics strategy. And a quick review again. Remember that the strategy is that you enter the scanner is going to give you an uptrend of stochastics, which is this panel 1, an uptrend with RSI, which is right here, and an uptrend in the histogram right there. And then we set up our entry on the high or the body of the candle, and then we set up our 3-to-1 ratio ruler to set up for our exit. And that would be its first Elvis shift. The second Elvis shift is we are looking at a stochastics weekly trend that we have re-engineered this scanner to show weekly trend also. And here is the optionables for this coming week, or actually coming Monday. And you can see right here that the scanner is picked up 17 possibilities. The top one being Oracle. Disclaimer: these trades are for studies and education only. If you're going to work these, you're going to take these trades and say, I'm going to go trade these. Don't. Do your due diligence. Remember, I'm doing options. There's two entryways. One is looking at the one with the lowest cost, which should be AM. The other, which is what my daughter likes, and which my other is what my grandson likes, he has high volume. He's a meteorologist, and he looks at volume as part of the weather pattern. Okay, well, that is the conclusion of today's report for Losers Become Winners with ITB at 73%. And catch you tomorrow. Thank you very much.